Good morning, and thanks so much for joining in after the long weekend. I'm Mathew, and this is Stocks to Watch. We're going to talk about three groups of stocks today that might be in focus. My guest today is Mayuresh Joshi of William O'Neill. Morning, Mayuresh, and thanks as always for joining me this morning. Not much in the way of news-based developments, but over the course of today and tomorrow, you'll have a lot of auto companies that uh, released their numbers for the month of November. There was a lot of hope that built up ahead of the festive season, and this really will be the barometer of how sales have been. What are your key expectations, and what companies are you really looking very closely at?
Morning, Alex. Thanks for having me. So, you're absolutely right. The festive season is just over. So, what we probably saw and witnessed in terms of the volume offtake, both at the OEM and the dealer end, was quite substantial, specifically after the lockdown phase that we witnessed, where there was absolutely no growth. I think this is going to be a critical phase, not just this one, where I think the entire phase in terms of how auto companies are going to maintain their momentum is going to be extremely critical. Now, the expectations largely is that companies should report a better set of numbers for November. But again, from the pack itself, the large expectation that is coming out, say for a stock like Maruti within the four-wheeler space, that they should have a decent growth. Probably because of the portfolio that they carry, right from entry-level vehicles to the premium vehicles that they are having in their product suite. But I think two-wheelers is something to be watched out for two, three reasons. One, I think the affordability in terms of buying or an ownership of a two-wheeler, along with the insurance cost, much lesser. The rural focus, the semi-urban focus, and the expectations of mobility, specifically in the pandemic and post-pandemic as well. I think those are trigger points that can probably have a say in terms of the footfalls that are coming through at the dealer and at the two-wheeler showroom and dealerships as well. And the third element, obviously, is even if petrol costs are going a tad bit higher at this point of time, I think the cost of running a vehicle also probably looks a little bit better at this point of time. So again, two-wheelers as a space is something that I'll watch out for. Stocks like Hero, where the expectation is of a good number coming from something like a Bajaj Auto as well. But at the same time, I think auto ancillaries. So I think look at what tire makers have done, look at what battery makers have done, both in terms of expectations of sales picking up and the replacement market. So I think that as a pack probably puts it in momentum right now. So if the numbers are to sustain, I think these are the spaces to watch.
But I'm also guessing that you will wait and watch to see which really are the leaders and which break through the noise before you really take a call on valuations, right? And which to pick up.
Oh, absolutely. So I think our methodology is pretty clear on that. I think sticking with leaders, picking the leaders within these spaces itself, and where the consistency is maintained, right? And that's what I was saying at the start of the show. That if the consistency is coming through, you probably got the stock playing through cycles in the right direction. So yeah, I think leaders, as per the O'Neill methodology, and where earnings are consistently.
Speaking of leaders, I want to talk about the entire pack, but I do want to focus on HDFC Bank. So I'm talking about the Nifty Bank here, Mayuresh, and the kind of run that it has had in November. 20% gains for the Nifty Bank as a whole, went close to that 30,000 mark before shying away from that mark and coming back down to around 29,609. But what could you say about this pack as a whole, about some of these banks having run up to levels that perhaps we didn't think would be reached so quickly? And therefore, what do you think about valuations? Which stock still looks attractive at this point?
So for the pack as a whole, and when we're probably looking at from our O'Neill lens, I think the underperformance was pretty stark because numbers were not coming through because of the pandemic. But largely, again, if you probably look at the more granular aspect on how Q2 numbers have been reported, Q2 has been relatively better in terms of advances growth, which is coming back. The NIMs and spreads, which have still got maintained for a lot of banks, provisioning largely done. Even if you account for the Supreme Court directive, I think it's a tad bit of an increase in terms of the gross stage 3 or the net NPAs, but that is adequately covered and cushioned by increased provisioning as well. Capital adequacy for the larger banks, there is no two ways about it. So I think it remains extremely strong. So as the economy bounces back, and as we are seeing inherent signs of the same in the next few quarters, these larger banks will obviously gain market share at the behest of the other ones, specifically the lower lying PSU banks. And again, I think the asset quality pressures, as they start coming off, I think the granularity in terms of the book value being more lucrative probably looks more appealing on the cards as well. So as per our ratings, I think the EPS ratings are improving, the RS score is increasing, and the overall master score is improving. So within the larger private banks, I think what we suggested to our clients as a disclaimer is something the new norms, if they come through what RBI has suggested, positive in terms of promoter holding. But again, I think from the entire dynamics and parameters that we're probably looking at, loan growth, advances growth, disbursements, asset quality, NIMs, provisioning, and the expectations of the future outlook that the management has put forth. Though valuations, for argument's sake, might be on the higher side, which has always been the case, it still looks like a quality franchise in our opinion.
Okay, Kotak Mahindra Bank, the pick for Mayuresh in the banking space, which brings me to the last group of stocks. And this is quite a wide array to choose from, Mayuresh. But really, the talking point at the start of this week is the OPEC Plus meeting, which incidentally got pushed to Thursday. It was supposed to take place today, but there was a lot of tension. There's a lot of a lack of consensus as to whether or not the production cuts should be extended or whether production will be increased as planned in January. In fact, at one point, Saudi Arabia's energy minister threatening to resign as co-chair of a key OPEC Plus panel, indicative of the kind of tensions that are quite rife. So crude oil coming off that level of 49 that was seen perhaps a little earlier in the week, now, on account of that extension in the meeting, but more importantly, really, is whether or not they extend those production curves. What does that mean for the Indian oil and gas space, though, and which are your picks?
So again, I think what really goes through in these meetings is the large unknown, right? So I think entire oil market depends on the demand-supply dynamics, and that's how the pricing is probably coming through as well. But again, I think Libya production coming up, the number of rigs in the US going up as well. That was what I was reading over the weekend. But largely, again, I think if you probably expect oil to probably still stay in a range, 40 to 50, 40 to 55, I think it has diverse implications for upstream and downstream players. So for upstream, obviously, I think with prices going higher, the net realization per barrel obviously increases, which increases their element in terms of reported numbers and the operating leverage that they create on the balance sheet. Again, I think the onus is that with higher prices, the exploration costs and the capex become far more viable. For downstream, again, I think the kind of purchase inventory loss or gains is determined by the pricing for a particular quarter. So I think as prices start moving higher, maybe I think the gains might come through because of the lower inventory that they've held. But for the next quarters, it might become an issue. But again, I think the pass-through and what happens in terms of the refining margins clearly determined by that. But I think the middle companies, Alex, is somewhere where I think the benefit might actually come through. So I think companies like Petronet, GAIL, just as an example, I think is where the transmission volume goes up.
No, please go ahead. Sorry, there might have been some interruption, but you were saying the middle companies, Petronet and GAIL, are your picks.
No. So I think just sorry for the disturbance. So I think those companies look interesting, is what I was saying, because I think they get hardly impacted because of any adverse move at either end. The pass through is probably very easy to do for these companies, though I think it happens with a lag. With petchem prices linked to crude, if crude prices move higher, the end product prices go up. And the entire value chain in the south, specifically with the Kochi pipeline now getting completed, the transmission volumes can go higher, the end user demand can probably come through in a far significant way, which will increase the leverage on the balance sheets and the reported EBITDA that they probably report. So I think the middle companies, in my opinion, look interesting from this entire oil and gas space perspective.
Absolutely. So we've discussed two picks, or rather three picks in the space that Mayuresh really likes. In, of course, auto, he's going to wait and watch. Banks, he's got a clear pick, Kotak Mahindra Bank, and he's watching for Petronet and GAIL. It's been a pleasure, as always, Mayuresh. Thanks so much for joining me today.
Thank you.
And to you, dear viewer, thank you so much for tuning in. Hope you have a great week ahead. Do stay tuned. Lots more coming up in just a short while.